And welcome back to the show this morning. 6:35 on the Real Investment Show. So we talked a little bit about employment a minute ago, because one of the things that we're going to see here over the course of the next few weeks is, of course, a very big spike in unemployment rates. And that's simply a function of, when you shut down an economy, that's what's going to happen, right? You just can't maintain employment at the same level when you simply have very little economic activity. Of course, this is going to feed through to one of the most important components. Now, we've got charts on all of this today on our website. So if you go to our website, realinvestmentadvice.com, we've got an article up called 5 Questions Every Bull Should Ask. Because if you're bullish about the markets going forward, which, there is a case to be made for that, timing is the big issue, right? Ultimately, we are going to get through this. We will have reduced prices. You can buy things cheaper. There'll be a really good opportunity to invest, which is what we want to take advantage of. But timing of that is incredibly important, right? To get it right, not too early. And, when you're taking a look at the amount of unemployment that we're about to see coming through the pipelines, that's going to affect ultimately what happens to the one thing that generates revenues and income for businesses. Now, I got a tweet this morning as a good example. It's like, well, JP Morgan says the bottom's in for the markets because they're looking past the earnings downturn into the end of the year, and they think it's going to be fantastic at the end of the year. Could be the case. I'm not saying they're wrong. But the problem is that right now we don't have guidance. We don't have guidance from corporations yet. We don't have guidance from a lot of the business front. We really don't have guidance from a bulk of the world at the moment. And again, this isn't a U.S. thing. This is a global recession. This is a global issue. And 40% of corporate profits basically come out of what we export. So we've got entire countries shut down at this moment. So exports are being, deeply impacted. Then we take a look at what's just happening in the U.S., and we've got a lot of job losses coming. People are going to have less money to spend. Personal consumption expenditures, that's what we spend as individuals. So when you and I shop for groceries or cars or whatever we're buying, that's all part of personal consumption. That makes up 70% of our economic growth. So that is going to take a hit. It was already weak to begin with, and now it's going to be very weak because of this. Now, that feeds through ultimately to corporate profits and to what companies make. And remember, as investors, what we are investing in is the future earnings and cash flow of the business. And you have to start to value what those earnings and revenues are going to be in the future. Now, right now, a lot of people are saying, again, but JP Morgan is a good example. Hey, we're going to look past this quarter and next quarter into the end of the year, and we should be coming back strongly, and revenue should be rising, very fast. That may be the case. I'm not saying it's not going to be, but it will depend on how long it takes to actually get the economy back to work. China right now, as an example, is they've gone through this process of the virus. They've plateaued, we think, and they should be back online. However, China is now locking down all of their cinemas. Why? Because they're afraid of the second wave. And this is one of the risks that we haven't priced in yet into the markets, is what happens if we go through this phase and we get another wave of this coming back, towards the end of summer, because the end of August, or actually August, is when flu season starts. So there's a lot of people going, well, as soon as we get into warm weather, then that'll kill the virus and we'll all be good. Well, flu season starts in August. That's the hottest month of the year in Houston, so that really doesn't hold a lot of water. But what if we get a second wave and it shuts the economy down again? Now, hopes are that we'll be prepared by that time. We'll have, tests. Johnson & Johnson yesterday talking about they've got a test that takes just 5 minutes and get everybody tested. But we still don't have a vaccine or a therapeutic yet. We've got those things in process. But vaccines can take up to 18 months to process and to get out to markets and manufactured, distributed, get into the hands of the doctors, et cetera. That could take up to 18 months. So if we get a second wave before we get the vaccine or therapeutic in place, then we're kind of right back in the same soup. So I'm not saying that's the case. So don't get me wrong. I'm not saying that. I'm just saying as we look forward, we also have to consider the risk that we don't get back to where we think we're going to be optimistically by the end of this year. We have a tremendous number of things that we don't know anything about at this point. And we're simply hoping that we're going to get through this in the next month and we're all going to be fine. And everything's going to return to normal. And we're going to go from a negative 10% GDP to a positive 10% GDP in one quarter. And that's not likely to happen. And the reason it won't happen is because even if we get through this, so let's be the most optimistic. At the end of this month, April the 30th, we're going to open everything back up. Everybody goes back to work. And police officers that were sitting in front of our office building this morning trying to catch people speeding, they're going to be too busy to try to catch you speeding. Right now, people are like, hey, there's nobody on the road. Let's drive really fast. It's like the motor speedway at I-10 because there's like nobody on it. So cops are sitting out right now going, yeah, come on. I need something to do. And I'll give you a ticket 6 feet away. I'll just throw the ticket at your car and run off. But when at the end of April, we get everybody back to work. So everybody that was laid off gets right back to work, and basically just have 1 month of paycheck that everybody lost. That's optimistic. That's like really optimistic. Problem is that a lot of the businesses that people were working at simply won't exist in another month. There's going to be a lot of business closures, already are a lot of business closures of businesses that aren't going to make. And they're not going to survive. So there's going to be a lot of jobs that simply don't come back online. Companies also aren't going to hire back everybody they just fired. Again, we talked about this a little bit yesterday. They're going to hire back people they need immediately, and then they're going to take their time hiring back other people till things kind of settle down a bit, and they're sure and they're convinced about what the outlook looks like. So the recovery process is going to take longer. Personal consumption expenditures are going to slow, and those are going to be down for a while, which is going to lower profits and revenues for businesses, which is going to make valuations a problem. But again, if anything happens between now and by the time we get to the end of the summer, if we have a second wave or something else occurs and we've already got a weak economy, then that could stretch this process out longer. So the point here is that before you get too overly bullish about trying to buy the bottom of the market, just be aware that there's a lot of risk here still. Bear markets don't tend to end in a month. Recessions don't end in a quarter. And the economic fallout that's occurring is something that's going to take a while to repair. It's not something that's going to just occur overnight. And, one of the things that we've talked about before is that bear markets usually don't end with everybody trying to buy the bottom. And normally when you have everybody talking about, oh, this is the time to get in, you got to buy now, you're missing it, that's generally not the bottom. Bear markets don't normally end that way. Bear markets generally end with people not wanting to buy anything. And there's a real risk that this little bounce in the market is exactly what it is. There's 3 phases to every bear market in history. You have a very sharp down, went through that. You had a reflexive rally, working on that now. And then you have a long, drawn-out process that leads to the eventual bottom. But that process, that third phase, is where we're starting to actually recalibrate valuations, what we're paying for cash flows against what's really happening in the economy. So there's this adjustment in price relative to what corporate profits and earnings are actually going to be. And that is yet to come, and we'll work on that this summer. So, all right, quick break. We'll be back, wrap up the show. It's a Real Investment Show right here on realinvestmentadvice.com. Make sure you're registered at the website. There's a big blue banner on the front page of the website right now, realinvestmentadvice.com. Now, if you're already a subscriber for our newsletter, so you already get our newsletter every week, you get our Technically Speaking post by email, you don't need to do anything. But if you're not on our email list, go by the website, click the blue banner for our investment summit. It's Thursday. We're going to email you exclusively a link before the summit on Thursday. Now, if you're not on our list, you won't get the link. So, and we're not going to post it. It's going to be a private investment summit for only those people that are on our subscriber list. So make sure you're by our website, realinvestmentadvice.com. Make sure you're subscribed. And then on Thursday, we'll email you our link for our investment summit with Jeffrey Marcus, Teddy Valley, Tom Thornton, Michael Leibowitz. We're going to cover all about markets, outlooks, economics, etc. All there on Thursday. So make sure you're on the list. realinvestmentadvice.com. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.